Last Friday, the 7th of August, something surprising happened in the currency markets. Euro to Japanese yen had been on a solid 3-day winning streak, but that rally came to an abrupt end. The pair slipped around 0.185% to close near 182.35. Yet here is the twist: over the same session, the euro posted solid gains against the US dollar. So why did the cross pair buckle against the yen? The answer tells us a great deal about the real mood driving global markets right now, and it could shape your trading decisions for the week ahead. The core reason is safe haven demand. Friday saw cautious risk sentiment sweep across markets, triggered by lingering fears over global growth. When traders get nervous, they flee to currencies perceived as safe, and the Japanese yen remains the preeminent safe haven, even in 2026. A fresh reminder of Japan's economic resilience came from its trade data. The country recently logged a third consecutive monthly trade surplus. That surplus adds fundamental backing to the yen's strength. Meanwhile, the euro, while resilient against a wobbling US dollar, simply could not compete with the flight to safety. Global growth concerns, likely tied to data from China or Europe earlier in the week, kept investors on edge, and the yen reaped the benefit. This episode exposes a fascinating divergence. The euro is currently strong enough to push higher against the dollar, helped by the market repricing of Federal Reserve rate expectations. But against the yen, that strength evaporates. Why does this matter? It tells you that the euro's gains are not born of broad-based confidence. Instead, they are largely a reflection of dollar weakness. When the true flight to safety test arrives, capital pours into the yen, not the euro. For traders, this split personality is a crucial filter. Do not assume euro strength in one pair will translate elsewhere. The euro to Japanese yen move on Friday was a stark reminder that risk appetite is still fragile, despite any surface-level optimism. Looking forward to the new trading week starting Monday, August 10th, the key question is whether this risk-off mood will deepen. If it does, euro to Japanese yen could easily retest the 182.00 level and possibly slip towards the next support around 181.50. A break below that might accelerate losses. On the upside, any recovery would need to reclaim 183.00 to signal genuine strength. But unless global growth worries dissipate quickly, the path of least resistance appears lower. Keep a close eye on any economic releases from the Eurozone and Japan this week, as well as broader equity market sentiment, because equities often move in lockstep with yen pairs. So here is the one thing to remember. Euro/JPY's failure to extend its rally despite euro strength versus the dollar is a warning sign. It reveals that the market's appetite for risk remains fragile, and that the yen's safe haven appeal is alive and well. As you prepare your trades for the coming days, watch the 182.50 level closely and stay alert to any headlines that could shift risk sentiment. Thanks for joining us today, and if this analysis sharpened your perspective, make sure to subscribe and hit the bell so you never miss our real-time currency breakdowns.